What is going on, guys? Welcome back to another Robinhood Dividend stock market investing video. My name is Kyle, and in today's video we're going to be going over my portfolio. If you guys did check out my last video, I had around $7,000 in it, but now I am down to $5,400. That is because I had a little bit of a problem with my truck. I had to drop $2,000, or actually $3,800 for a new engine. So that is why my portfolio is a little bit lower today. On this video, I ended up selling out of Boeing and stuff like that, but we're going to be doing a little recap of my $5,447 dividend investing portfolio. Some of these stocks aren't really dividends, but a lot of them are. Really good day today in the portfolio, up $85, so almost 2% today, hanging out at right at 1.6%, so not too bad. But anyways, we're going to go ahead and get into this video, guys. If you love dividend investing, this is the right channel for you guys. Make sure to subscribe. I'm trying to build up a stock market community, a dividend investing community through this channel. So make sure to subscribe, drop a like on the video if you guys enjoy it, and let's go ahead and get into the video. So the first stock that we are looking at is going to be Visa. Right now on Visa, we are down, I think, $10 overall, so roughly 2%. Average cost basis on it is $179, so not too bad on Visa. It actually did have a nice dip. Let's go back to it real quick. It did have a nice dip, right around, what's the lowest that it got? 168. So not a bad dip on Visa. We should have bought some more, but I did not have any cash on hand. Just been having a lot of truck issues. Next stock is going to be Costco. Costco actually reported earnings yesterday. They actually missed revenue by I think $1 billion, but they did see a lot of. I think they still saw an increase in revenue year over year. So not a bad thing for Costco. It sucks that they missed estimates. I was hoping to get a little after earnings swing on the position, but I still think in the long run Costco is going to do absolutely phenomenal. I mean, they're a huge business, and they just have so much room for growth. Dividend on it is 0.92, so not too good, but also it's definitely something better than something. So not a bad position on Costco. We are up $9 on it. Oh, this is a position that we've been getting killed on. This is PayPal. Our average cost on PayPal was $115. So not too good on PayPal. We own 4 shares of it, down $50, roughly 10, almost 11%. So not looking too shabby on PayPal, but I think in the long run, PayPal is going to do phenomenal. Next one is Disney. Disney has actually been having a very bad week. If you look at the weekly chart, it's actually up for the week, but if you go to the month, it's down almost 5%, and in 3 months, it is down 8%. So not too good on Disney. We are down $23 overall on it. Average cost is $138. Disney, I still think has a lot of room for growth because of their streaming service. And also, before we go away, let's go ahead and look at their dividend. Their dividend yield is 1.44. So not a bad dividend for Disney. Next position is going to be Johnson & Johnson. This is my biggest position. We have about $2,300 in there, almost $2,273. We have 17 shares of Johnson & Johnson. We are up $64.27, so roughly almost 3%. Average cost basis is $129.95, and I think not too long ago I actually did buy another share. So yeah, on September 26th, I actually bought a share for $130.72. So Johnson & Johnson is my biggest position so far. Now, they've actually been doing good for the past couple of days, as you can see. Past couple of days, they've actually done really well. There are some risks with Johnson & Johnson. Obviously, there's a lot of stuff going on with the opioids and the talc powder. I think they're getting away from that stuff now, thank goodness, but that was kind of a scare there for a bit. And then healthcare as a whole is just kind of slowing down. So Johnson & Johnson right now is just, kind of just facing a little bit of turmoil, but I think it's nothing that they haven't seen before. And I think over the long run, they're going to do great things, and their share price is just going to continue to, I think their share price is just going to continue to get higher and higher. Next position is 3M. I actually did have a bigger position, but I sold out of it. But I just rebought back into it because I had to take some money out of the account. But our average cost is $163, so not too bad on 3M. We are down about 4.4%. This company pays a solid dividend at 2.86%. So not a bad dividend for 3M. It actually dropped super low this week. It got down to like $150. So not a bad not a bad share price for 3M at this particular time. I think it's a great company and it's at a great value. Next one is Realty Income. I love this stock. You guys have probably seen this stock on YouTube. Up about 4% on it. We own 2 shares of it, so we have about $156 in there. They pay a good dividend of 4.19%. They pay every single month too. Matter of fact, if you go to my history, we actually have a 45-cent dividend coming from Realty Income this month, but they pay every single month. So, you know, whatever that is times 12. Let's see what per share. 22 cents per share. So 22 cents or 23 cents times 12 will get you the dividend for Realty Income. Next one is going to be Altria. Altria has just been getting absolutely slammed for the past month. It's a tobacco company and it's a vaping company, so they own a stake in Juul. And there has been so much turmoil facing like vaping and just Juul here, you know, recently. It's just been sitting the stock lower and lower. But I think in the long run, the stock is going to do, you know, very well. I just think that right now they're in a lot of heat. But these tobacco companies and all that, they've seen that their whole entire, you know, since they've been, you know, these tobacco companies have just been that they've faced turmoil since they've, you know, were created. So nothing new for them. They pay a solid dividend too, like a really, really good dividend. Matter of fact, I think I have a dividend coming from them as well. So yeah, I have $3.36 coming from them, and that's only from 4 shares. So not a bad dividend at all from Altria. We are down also $9.32 on it. Next stock is going to be Pfizer. Pfizer, I have 6 shares of it, up about 3%. I actually bought into this one like 3 days ago. So I bought at it whenever it was pretty low, right around, I think it was right around here, right around $34, almost $35, but they pay a really, really good dividend as well. But they pay a very good dividend at 3.16%. I own about 6 shares of them and up about $6.27. So Pfizer is a really, really good company too. They're like a kind of like a pharmaceutical company and stuff like that. You know, they make, I want to say they make, is it Advil? I think they make. They make a lot of stuff, but very, very solid company. And they actually had a really, really good price right now. Next one is going to be Airbus. Airbus, I think, is a really, really good, it's kind of like a spec stock for me. I think they're going to do very well in the future as long as like the airline business and stuff like that continues to grow. I think this company, along with Boeing, are just going to continue to go. And since the Boeings are like facing, you know, so much, you know, kind of like controversy right now, especially the 737s, I think that Airbus has the potential to, you know, jump and make a huge, you know, boost in the market share. And they also make a ton of planes for China. And I think in the long term, this stock has the potential to, like, you know, reach $100. But that's just my opinion. Also, they pay a dividend of 1.45%. So not a bad dividend as well. We're down about $11, so roughly almost 5%. We got an average cost basis of $34.11 for Airbus. But I really like this company, and I really want to add some more shares to it. It actually got hit pretty hard this week because of the U.S. imposing tariffs on Europe. Next stock, my last stock, is going to be Delta Airlines. Delta Airlines got destroyed this week, as you can see, down about 8%, and that's after a good day like today. What happened is they raised their prices, and a lot of analysts cut their targets for Delta. So that scared a lot of investors and sent the stock, you know, plummeting. But I think over the long run, Delta is going to do very good. You know, these airline companies are not going anywhere, and I think in the long term, they're just going to continue to grow and grow and grow, especially with how popular flying is becoming. And yeah, I think in the long term, you know, they will lower prices again for Delta in the future, even though they just raise prices. But I think this stock has a lot of room to grow. And we have about 5 shares of it and about $269, so not bad. And they pay a dividend of 2.62%, so not bad dividend as well for them. So that is going to wrap up the video, guys. I hope you guys enjoyed the video. If y'all want to see more stock market investing videos or dividend investing videos here on Robinhood, make sure to subscribe, smash that like button, leave a comment on some of your favorite dividend stocks that you think I should check out, and I will comment right back. I'm trying to build a dividend investing community through this channel. So guys, if you want to talk in the comment section, leave a comment. I'll be happy to just discuss some stocks with you guys and just, you know, talk about the stock market in general. So right now, as of October 4th, 2019, we are at $5,447. Hopefully next week is a good week. But it was really, really rough week this week, actually. But we actually recovered today. So until then, I will see you guys in the next stock market investing video. Hope you guys trade smart, trade safe. See you guys in the next video. Peace out.